And even though pretty much all the restrictions of the pandemic are now gone, small business owners in South Korea are still struggling. In fact, sales for most of them are now lower than they were when the rules were in place. Their loans are also getting more expensive as interest rates rise, causing many of them to consider closing up. Choi Min-jung reports.
With social distancing rules eased in April, many in South Korea believed things would be closer to normal. However, this has not been the case for business owners. A quick recovery was expected, but businesses witnessed a drop in sales due to soaring prices of goods and services, as well as interest rate hikes.
Business picked up again to some extent for about a month or two, but after that, it suddenly dropped. At the minute, any sort of recovery has stopped.
Data from the Federation of Korean Industries shows that 7 out of 10 business owners saw a bigger drop in sales after the easing of social distancing rules compared to a year ago. The drop was mainly caused by sharp increases in prices of raw materials, labor costs, as well as rent. Rising loan interest rates are another key factor. The average rate was 5.9%, a 2 percentage point increase from last year. 1 in 5 people took out a loan with a high interest rate of 8% or above. Due to such challenges, 4 out of 10 business owners have thought about closing within the first 3 years. This would have a negative effect on the nation's economy.
The proportion of business owners in South Korea is about 25%, the highest among OECD countries. So if they struggle, it can eventually have a significant impact on the economy, so countermeasures are needed.
To overcome the current challenges, business owners are demanding that the government draws up policies for lowering interest rates on loans and ways to boost consumption. Choi Min-jung, Arirang News.